Good morning, everybody. It's another Monday, July the 13th, to be precise. Here's what's on this morning's agenda. Oil prices jump after another series of US and Iranian attacks in the Middle East. SK Hynix climbed in New York on Friday, but the stock is dropping again in Korea this morning. And we get you set up for the macro and earnings stories. Oh, and of course the football that are set to dominate the week ahead. Tom.
So across the markets, then, the focus is on the oil price right now. So the geopolitical risk premium being priced back into Brent. Price is up 4.5% right now. As Anna was saying, the Kospi's in focus. SK Hynix dropping double digits right now, at least in the Korean session. Nasdaq 100 futures then also lower by 1.3%, called lower by 1.3%. S&P futures also looking lower. European futures pointing to the downside as well after ending last week moderately lower. But it is the oil price story that is front and centre again for European stocks in today's session. The countdown to the opening trade starts right now.
Welcome to the programme then, everybody. This is then Monday morning. This is the opening trade. And Tom, let's start with everything that's moving energy prices, shall we? Because we have a really big jump in oil prices this morning. 4.4% higher on Brent at 79.37. So we seem to have moved a long way downwards in the oil price and then very much back upwards on the back of more attacks. So more overnight attacks, weekend attacks. And over the past week, we've seen this sort of tit-for-tat exchange taking place. And actually what's notable overnight is what the US are doing seems to be heavier than was previously the case. What the Iranians are doing seems to be wider, targeting more states than was previously the case. So all of this really prompts questions about what this means for the talks, the longer-term talks that were supposed to settle all kinds of long-term issues between Iran and the United States. What it means right now for the Strait of Hormuz as well, because there are different takes on how open the strait is right now. The Iranians saying it's closed, the Americans saying no, it's open. And so all of that is adding up to a higher oil price. But it's not just oil we're focused on, it's also other refined products. And that takes us to other geographies and everything that's been going on in Russia, Ukraine against Russia and their infrastructure. So there's a lot pushing higher on these energy prices.
Which does raise the question as to whether or not at least some investors and some market participants out there have been complacent in terms of their assumptions about lower energy prices, given the double whammy that we're seeing from Russia in terms of the refined products, as you say, and what's happening in Iran. Really interesting in terms of the step up in attacks, and this is crucial as well, is Kuwaiti infrastructure being targeted for the first time in a number of weeks. We've got Jordan and Qatar being targeted by the Iranians as well. Gas prices in Europe are higher by about 3.6%. Brent is up about 11% since this time last week. So the inflation push is there. President Trump with strong words again for the Iranian regime, but also saying that the opportunity for negotiations is still there. And we still don't know. It seems like the traffic through the Strait, at least today, has pretty much ground again to a halt. Yes,
we were just showing there the impact that we're seeing on refined product and crude. So crude had dropped quite a lot, of course, since we saw the Memorandum of Understanding being put in place. But it hadn't taken down the refined product with it. And some of that is to do with that other geography, which is, as we've been saying, what's been going on in Russia. Russia, usually a big exporter of all kinds of refined product, whether that is jet fuel or diesel or gasoline. And so now there's all kinds of talk about whether, that doesn't seem to be happening and whether they even have enough for their own requirements. And broadly speaking, Javier Blas talking about how the world is without some 10% of its refining capacity right now. And so all of that does just add, as you say, to that inflationary dynamic that is going to be front of centre this week.
That's the household, that's the business impact on a big week, of course, inflation, and we'll break that down for you in terms of the preview around US CPI as well. So another big week in terms of the inflation story, of course, what all this means for central bank thinking as well. To the tech story, SK Hynix, very successful ADR listing in the US, of course, on Friday, pretty well received by the markets, double-digit gains. But today, is it profit-taking? Is it because some of those fund flows have shifted to the US? But SK Hynix is under pressure, significant losses for that stock. We know that it is volatile, so we're getting used to the volatility. At least we talk about it on an almost daily basis for SK Hynix, but it is having that negative effect more broadly across the Kospi, which is down sharply in the Korean session right now, down 7.8%. I think halted for trading as well. It certainly was for a period of time. So we're working out whether or not this is this is profit taking, or this is a kind of just a reallocation of your capital, maybe to the ADRs. Again, it was a positive session, and the team in the US speaking to the head of SK Hynix, who said that he still sees strong demand and shortage of the supply of memory through 2030.
Absolutely, and some of these companies in this sector in Korea, so it's an SK Hynix, one of them, talking about doubling production capacity. And we go back to that old question about whether this is cyclical, whether this is structural. A lot of people making the assumption that this is structural, and therefore that big capacity build out really makes sense. Is that going to be what shareholders want from this business, though? It certainly seems to be what lots of governments want from the business, because the US and Korean governments both want capacity to be expanded in their geographies, of course. But will shareholders want this? We've talked about how the Kospi is already in a bear market. Well, we also note that the Kospi is incredibly cheap right now, which seems kind of incredible. But that's the extent to which. But that's because of the earnings strength. The extent we've seen the drop, and it is now in correction in a bear market, but it's also because of that earnings strength, because of the forecast for earnings. So this is on a forward PE. And, you know, how much confidence do you have in the E of the PE when you're looking forward? And that just seems to be, there's so much volatility around those numbers, so many varied expectations as to how much profit will then attach itself to these memory makers.
We're also getting numbers, and we've had numbers in the last half an hour or so from TSMC, of course, that produces many of the chips for NVIDIA, for Apple. Strong set of numbers in terms of sales. TSMC quarterly sales rising at 36%, which just suggests that demand for AI hardware remains intact. Just for the month of June, TSMC sales were up close to 70%. Versus the same month last year. So TSMC coming through with some numbers suggesting that the AI demand story is holding up for them. OK, lots of risk events ahead this week, Tom, so let's just go through some of those. Of course, bearing in mind that we have two huge football games taking place, Tuesday night, Wednesday night, so that will distract people, let's just put it that way, shall we? France, Spain, England, Argentina, those are going to be in focus. But in the markets, US CPI is going to be front and centre, but also Kevin Warsh testifying, a semi-annual testimony, to Congress. Will these things added together give us a sense of whether July is a live meeting? And it doesn't seem like the market thinks that July is a live meeting right now. We've got a 24% or so chance of a hike attached to the month of July. So it seems like the market is thinking, no, this is not the month where we get any hike, if that's what we're going to get. And we add into that all of the banks that are going to be reporting just tomorrow. It's going to be an incredible few hours for the bank reporters and anyone following the banking sector. But lots to watch out for there. So earnings season kicking off to kind of stress test where these markets are right now. The picture for Kevin Warsh was so different at Sintra when he spoke, with inflation, at least the oil price story heading in a very different direction to today. So whether or not the language changes from Kevin Warsh when he gives this testimony, with, to your point, markets pricing between 1 to 2 hikes by the end of this year, is going to be something clearly that investors will be focused on. And will he be trying to just talk about his task forces? He's now 7 task forces? 15, I think. 15. He's nominated 15 leaders to the task forces. So actually, no, I take that back. Not sure how many there are, but he's nominated a lot of leaders to them. And Bloomberg Intelligence talking about how they managed to be a list of both respected and unconventional thinkers. So, you know, maybe that's a success, at least for now. But yeah, the bank earnings story is going to be amazing. 5 US banks reporting on Tuesday. Stock trading are going to be in focus. IPO boom's going to be in focus. 2 of the conference calls actually overlap with each other. So I don't know if anyone has the bandwidth. We're going to need all the AI tools available. OK, coming up, we're going to get to what is happening in terms of the geopolitics, with a focus, of course, again, on the Strait of Hormuz, as we've been discussing. We're going to be hearing from the French President Emmanuel Macron later today, hosting a summit of the coalition of the willing countries in Paris to discuss Ukraine, more on what to expect from the meeting of leaders. Plus, Bloomberg learning that Nippon Paint has offered $8.5 billion for Akzo Nobel's paint business. We're going to dig into the potential tie-up and track those shares at the open. Up next, we're joined by Elliot Hentoff, Head of Macro Policy at State Street Global Advisors. If you have any questions for our guests, send them to us on IB plus BBTV Go. This is Bloomberg. Welcome back. We are a little over 45 minutes from the opening trade this Monday. European futures pointing lower by 0.9%, risk off across equities, and higher oil is definitely part of the story when it comes to the negative risk factors for the equity market and the inflation risks. Oil currently up, Brent up 4.3% at $79 a barrel, WTI at 74.57. So oil prices rising then this morning after the US and Iran exchanged a fresh round of strikes. US Central Command says forces hit dozens of targets in the latest attack. The escalation came after Iran reportedly fired again at commercial ships in the Strait of Hormuz. Both sides issue conflicting declarations over whether the passage is open to shipping. Let's bring in Bloomberg's Abir Abu Omar in Dubai. Abir, what do we know then about the latest round of US attacks on Iran and how Tehran is responding to this?
Good morning, Tom. Well, we're seeing similar patterns repeating themselves, right? So Iran starts by attacking ships in the Strait of Hormuz. The U.S. retaliates by hitting targets in Iran. And this is certainly what was playing out over the weekend and into the early hours of this morning. So it started again with Iran hitting a Cyprus-flagged ship in the Strait of Hormuz over the weekend. The U.S. Attacking parts in Iran that includes blasts that were heard in the southern coast, including energy hubs in the Bushehr province and also the port cities of Bandar Abbas in Iran. Iran retaliating to the U.S. attacks in turn by hitting countries in the region. So that's Jordan, Kuwait, and Qatar. So we're hearing some infrastructure damage in Qatar's oil company, particularly the drilling department there. And Qatar yesterday saying that 3 people were injured as a result of the Iranian attacks, one of them a child, actually. So again, these patterns that we are seeing repeating themselves, although we didn't think we'd be here at this stage, especially after that MOU was signed about 4 weeks ago in June in Switzerland. It does look like the talks for the time being are suspended. Now, they were suspended, Tom, because of the mass funeral of the late Supreme Leader that ended last week, but we just don't have a lot of clarity yet on whether these talks are set to recommence and whether the mediators will get involved again. And just to note here that the mediators, including Qatar, that's one of the countries that were attacked. And so we're seeing, again, these repetition of patterns of tit-for-tat attacks between the warring sides. A lot of unclarity still. And at the heart of this, of course, is the Strait of Hormuz and the shipping movements there.
Yeah, absolutely. A bit. What is the current situation in the Strait of Hormuz then? Because we get conflicting reports from the two sides.
You're right. And look, I mean, two sides cannot be right, because what Iran is saying is that the Strait of Hormuz is shut until further notice. The U.S., President Trump, Central Command are saying, actually, no, the ships are free to move in the Strait of Hormuz. The GMIC is saying that the southern part of the strait is free for movement. But up until this morning, we're seeing traffic yet again at a standstill. Yesterday, our team's reporting that some ships are successful at passing through. We reported that 6 ships have been able to pass through with their transponders off. But we're still seeing ships and tankers and these ship owners going through the Strait of Hormuz, treading with a little bit more caution. But up until this morning, we're seeing traffic at a standstill. And so that's yet another thing to monitor. And just to bear in mind that the Strait of Hormuz is one of the major concessions in that MOU that was signed, the 14-clause MOU. It does look like every other clause has taken a backseat for the time being. Iran really wanting to assert its dominance over the Strait of Hormuz. The U.S. not biting and hitting Iran at any chance when Iran strikes those ships in the Strait of Hormuz, Anna.
Abir, thank you very much. Bloomberg's Abir Abu Omar in Dubai. Let's bring Elliot Hentov into the conversation, head of macro policy research at State Street Global Advisors, with us on set this Monday morning. Elliot, good morning to you. So another weekend of these tit-for-tat attacks between the US and Iran, and oil prices as a result of that, and other news flow out of Russia perhaps up by 4%. So we're back to $79 as the handle for Brent. How comfortable do you feel about your earlier assumptions, Elliot, about where oil prices go and where that allows your investment strategy to head?
Well, I think the last time we spoke, we didn't have an MOU in place. We were pretty confident that it would come before July. It did. and we thought oil would be hover around $85. And then we saw the markets got excited. They cashed the full piece dividend before time came. And so I actually think oil prices are back to where they should be. We should kind of be around the 80 range, maybe a little bit above, a little bit below, depending on where news flow is. But fundamentally, we don't really have new information. We knew it was going to be a fragile agreement. It is a fragile agreement, but fundamentally the structure has not changed. Both parties do not want to return to full war, and the disruption is not sustainable over a long term.
Okay, because, yes, I mean, it does seem as if maybe fewer ships getting through than maybe our hopes at the time that the MOU was signed. I mean, it's difficult to say. As we were hearing from Abir, they turn transponders off, so sometimes it's for understandable reasons, but then it's difficult to know exactly how much gets through. But is that the risk? Is there upside risk to energy prices because fewer vessels will decide to make the journey?
There's at this point, it's, I think, classic more tail risk. The way you think about geopolitics broadly, things could go badly wrong, yes, but the core base scenario is that there will be some type of arrangement over the coming weeks that kind of lessens the strains on energy markets over time. That has to be the core base assumption at this stage.
And Elliot, good morning. Your call or your view on $80 to $85 a barrel on Brent, that is something the equity markets can handle, right? I mean, at what point what level of oil becomes an issue for the stock markets?
We're far away from that point. That's just simply the reality. If you look at inflation data, if you look at market pricing of inflation data, the oil shock has kind of been put into the rearview mirror. Again, I think a little bit prematurely.
Yeah.
It's kind of cashing the full piece dividend. That was probably not justified. But we're far away from territory where it becomes punitive. That's well north of $100 over sustained periods. That's when it starts to become an issue for the equity market.
You're still comfortable with your call that the Fed doesn't hike this year?
Yes. And look, if you again look at the inflation data, it's not the acute pressure there. You have some mixed signals in the market, and I think as long as the signals are mixed, kind of an employment market that's mixed, price signals that are mixed, I think the Fed does not move. The Fed needs kind of more definitive data to react. Yeah. And that could come next year in quite a different form.
Okay, so we're getting headline inflation this week, and the headline number could show that drop below 4% once again. So maybe there's that ambiguity there on the inflation side of things. Another inflation watch, though, you say that the developments around Ukraine and Russia, that this is becoming more of a market-relevant conflict once again.
Yeah, I'm frankly a little bit more worried about that conflict. We've had Russia curtailing certain diesel exports. It's actually Russia's buying in refined products into international markets. So the squeeze in some subsets of energy markets is going to get worse. And the big thing is the Ukraine-Russia war has changed in fundamental terms. And I think that opens up a variety of scenarios that were a little bit unthinkable. A lot of them are downside scenarios. I think the upside scenario has also become a little bit more credible now that there's incentives for Russia to perhaps come back to the table and actually move diplomacy ahead. Either way, I'd say there's more uncertainty and unpredictability, whereas the Iran war is not resolved, but we kind of know where the guardrails are, and we have a better sense of how to predict and think about scenarios there.
I'm just trying to think about how the European equity story was, at the start of the signing of the MOU, started to diverge in a positive fashion from US stocks. That didn't play out last week. So European stocks ended lower, US stocks ended marginally higher by the end of the week. Where does all of this leave the European equity story?
Well, again, I think the peace dividend markets just got too excited to cash the full chunk when the MOU came out.
Yeah.
I do think as the year progresses, that story of the broadening equity rally outside of the core sectors in the U.S., outside of the U.S. geographically, it does speak in favor of a European recovery a little bit.
Okay.
Is that what diversification means to you then, Elliot? We heard a lot last week about diversification in lots of different forms. Some people talking about moving between different parts of US tech, others talking about different geographies, and some talking about, actually time to get into financials now. What's the diversification trade for you?
Well, in the equity side, it's certainly a broadening out sectorally away from the core drivers of the rally the last 2-3 years, particularly as we now start to see some of the AI capex show up in non-tech sectors, and one would assume that that delivers improved profitability there. But also geographically, as long as these geopolitical risks get resolved, you do have kind of a little bit of a tailwind for those equity markets to catch up a little bit.
Which are those non-tech sectors then where it's showing up? I mean, we're going to focus on US banks this week and IPOs and the boom there, M&A, the boom there. That seems to be CapEx, everything that goes into funding this big CapEx boom. I suppose there's a more than tangential link between that and what's going on for US banks. But where are you seeing it show up?
I think that the data to watch really is who's spending in serious ways now spending money on CapEx that is not in the tech sector. And those are the quarterly figures to watch.
Okay. The company's spending on CapEx that is not within the AI sector. So kind of third order effects of this spending story. How do you think about the bonds? Is the bond sell-off got further to run? I mean, you see the Fed on hold. Yields have been rising, and you can link that. That's pretty linked to the higher oil price story. Is there a bond sell-off shock that we should be bracing for?
Yeah, I think the bond story is a little bit more tricky because structurally we're in a world where yields are going to stay high and rising over the very long periods. That has a lot to do with obviously the fiscal picture. But near term, you've had a little bit of a relaxation on the inflation story. You have the nominal GDP growth holding up pretty well. So that speaks actually for a little bit of a relaxation on long-term yields. But that's a short-term cyclical story. The long-term story is that the pressure is upward.
So duration remains. You want to steer clear of duration at this point?
Yeah, very, very much so. For long-term investors, we really do not like duration.
And so if we see hikes from the Fed, this will be a genuine hiking cycle, not just some sort of, one-off signal.
Absolutely.
But not till 27, is it?
Precisely. I think you need to see something a little bit more definitive turn, kind of the supply shocks in the rearview mirror, oil, immigration, tariff shocks, all behind us. Then you see kind of the real economy relatively robust. The labor market tighter than it was before, wage pressures, inflation pressures, a hiking cycle.
OK, Elliot, thank you very much. Elliot Hentoff, Head of Macro Policy Research at State Street Investment Management. Tom.
OK, here's what else you need to know this Monday morning. Bloomberg learning that Nippon Paint has made multiple offers for Akzo Nobel's decorative paints business in the last month. Sources tell us the latest bid values the unit at about $8.6 billion and would reunify the Dulux brand globally while expanding Nippon Paint's footprint in Europe. Akzo Nobel has said the offer, quote, significantly undervalues the unit and has yet to engage with the proposal. Andy Burnham is reported to be considering unveiling a bolstered budget later this year. This is allies and experts seek to persuade him to pursue a land tax, public control of utilities and a more ambitious devolution strategy. Burnham is on course to take over from Keir Starmer as the UK Prime Minister next Monday. And South Carolina Senator Lindsey Graham died unexpectedly over the weekend at the age of 71. His passing leaves Ukraine without one of their most effective conduits to the White House. In the last 3 days before he died, the South Carolina senator met Ukraine President Zelensky, visiting a drone production factory in Ukraine and sealing an agreement to advance a Russia sanctions bill. So the death of Lindsey Graham having a potentially significant impact on Ukraine and where Ukraine sits in terms of the president's thinking about the level of support that he wants to give this country. Lindsey Graham, of course, a key ally, had been a key ally of President Trump, and President Trump not always seeing eye to eye with Zelensky, but Lindsey Graham consistently pushing the need for support for Ukraine and punitive measures in terms of potential additional sanctions on Russia as well.
And that's what Lindsey Graham was pushing for, some of those additional sanctions. And he'd made many trips, as you said, to Ukraine. And it was interesting that we got a lot of warm words about Lindsey Graham, of course, on his passing, but including from Volodymyr Zelensky, who was making that point, which is notable geopolitically. 7:26 then here in London. Coming up, as simmering Middle East tensions signal persistent inflation, we will talk to Michel Vernier, a fixed income strategy head at Barclays Private Bank. That is next. We'll be focused on the start of the European bond market session to see whether we get yields going much higher this morning on the back of a higher oil price. This is Bloomberg. Welcome back, everybody. 30 minutes then from the start of the European equity trading day for this Monday. Yes, another Monday. And the European futures picture looks negative. Eurostoxx 50 futures down by around 0.8%. We've got a negative handover, Tom, from the Asia session. Further selling on the Kospi, of course. We're very used to that, very accustomed to it. But Nasdaq futures, if we look ahead, down by 1.3% as well. So it seems that what is riling tech stocks could pass through Europe.
Yes, and your 60-40 portfolio is not working for you today because bonds are selling off as well. Not particularly aggressively, but you are getting a move of 4 basis points higher in yields on the German 2-year at 2.86. The 10-year Bund is at 3.09. Yields up just shy of 3 basis points. A bit of selling pressure for BTPs as well. French OATs yields up between 2 to 4 basis points. And Treasuries as well also selling off in the session with the 10-year currently at 4.57. Let's bring in at this point Michelle Venier, Head of Fixed Income Strategy at Barclays Private Bank, joining us on set. Michelle, good morning. Thank you for your time. How much further does this bond sell-off have to run?
Well, it depends really on the time frame. For when it comes to oil, obviously, we have now learned a hard lesson over the last couple of years now that transitory is this narrative doesn't really work. And most of the economists and also the markets have tried to look through the oil peak, and it doesn't really work for now. So the bond market needs to get used to that uncertainty. Break-even so far have been fairly contained when looking at the US. It has been a little bit different in Europe and in the UK. But I think there's probably a bit more to come in the next couple of months. Again, our previous speakers said it's not about if we get a resolution, but probably about the timing. And the timing is the big uncertainty this time.
OK, so the timing. Do European sovereigns more exposed then? You think there's further to run up in terms of yields higher for European sovereigns on the back of higher energy prices?
Well, there are two narratives here. I mean, when we look at the short end at the very first point, we have a very dependent economy on prices, on commodity prices. Not only energy, by the way. We also have the El Nino, which you reported about. So there's a lot of price pressure for the European economy. But then on the other hand, and the ECB needs to act. We have received more comments from ECB member Schnabel, who said actually we probably would need more hike and probably more hikes potentially. So we think there's definitely one more hike at the very least to come. But on the other hand, we have the very vulnerable economy. I mean, we came out with a contraction in the UK growth profile, European growth profile, and we also have a fairly weak labour market as well. That's something which the European economy needs to also take into account. So there's only so much what the ECB can do. Now, the other bit is obviously the long end. There is more uncertainty most likely to come. The summer is probably going to be hot in the autumn as well.
OK, so a lot more issuance at the long end to be nervous about. Is that the story for Europe?
Absolutely. I mean, France probably will stay in the limelight. We know that in focus, so we know that the French election is coming up, and that will bring some noise. The bond market will look at the fiscal path, and France is now within the EU member states the third largest leveraged country. I mean, this is definitely not sustainable, and the bond market will have its moments once again in Europe, and therefore we think there's more volatility.
OK, so more volatility there. What about the US side of things? We're looking ahead this week, Michelle, to Kevin Warsh. He's going to be speaking on Capitol Hill, and I was going to ask you what messaging will he want to communicate, but this is a person who doesn't want to really give us much of a message, at least not in terms of our expectations of rates. So where do you think what will be interesting to watch for from his speaking? I
think Kevin Warsh, this is not only about a tweak in the Fed, it's about a regime change. He made that very clear very often, and he may not actually give too much about what his current thinking is about rates. Obviously, he has done, or let's say adopted, I wouldn't say U-turn, but adopted his language because he can't ignore the high oil price, inflationary pressure. We should have normally or would have been much lower in the CPI core CPI or PCE better. And that's something which he probably will mention and consider at least. But I think more importantly, he will point to the big regime change. He obviously appointed all the leaders within the different task forces, and that's something which he will most likely address. And what we are expecting, and I think what the market needs to learn as well, is that we will have a new phase of the Fed. So there will be a phase with the old, or phase of the old phase, so PH phase, and then the old phase of the Fed, so still operating under the old or current regime, and then we will have a new phase. And that's something which Kevin Warsh will take into account, and the market will need to adopt to that as well.
I want to get back to the kind of the issuance story, but with a focus on what's happening in terms of the corporate space. So corporate bond issuance, and we're seeing a lot from the hyperscalers and those trying to build out the AI infrastructure story. Relatively well received so far by the markets. Is there a point this year when there's pushback on that? How much ability is there for the markets to absorb additional bond issuance at the corporate level?
Well, look, I think we have already had the word monetization quite repeatedly in the news, and that's something which the market will look at. Now, interestingly, if you look at last week, for example, Amazon came out, and yes, it was fairly well absorbed, but not at the issuance, the bond issuance, but wasn't as absorbed or well absorbed as before. So we had the first or second wave of hyperscale bond issuance, and that's out now. Now we have actually a very big increase in technology bond issuance in the broader corporate bond indices, and portfolio managers now need to make an assumption or consideration or decision, actually, do I actually overweight, do I actually put on more hyperscaler bond issuance in my portfolio, or to what extent do I exposing myself too much? And what we've seen actually, interestingly, with the Amazon bond issuance, that's probably more reflective and which will probably pave the way for the trend in the next coming quarters, is that recycling is happening now. So basically, portfolio managers are basically soaking up the primary, but then selling the old ones they already had from the first or second wave. So whereas primarily we had the primary market as a price guidance, now it will actually directly affect the secondary market as well. So I think we will see in the next 2 or 3 quarters more of that story coming, that supply is not as easily absorbed. And finally, it will be all about the price.
Yeah, it will all be about the price. And speaking of price from a different asset class, I just want to note that SK Hynix shares have fallen by 15.4% in Seoul. That is the most on record. We see incredible day after day, incredible volatility in the share price of this particular company, but also in the Kospi more broadly. And I wonder how that ties into the sort of the limits of corporate debt issuance that maybe we're talking about. Are we talking about the limits of corporate debt issuance, Michelle, or are we talking about just people asking tougher questions of these issuers than they would in the past?
I think it will be tougher questions to ask. I mean, what we need to really consider is, for example, when we go back to the late 90s and the TMT bubble, when the telecoms have really re-leveraged, and then there was a big question mark because then we have seen all these downgrades. This is not really happening this time. We have seen this obviously with one big company, but everyone was already expecting that. Spreads were wide already. Now this time, the bulk of the hyperscalers or bond issuance are actually in the AA, AAA segment. So the bond market is still happy to absorb that, also because as a alternative to US Treasury, which seems to be much more volatile than corporate bonds these days.
Michelle, thank you very much. Yes, interesting world, interesting times we live in. Michelle Vernier, Head of Fixed Income Strategy at Barclays Private Bank. Coming up on the programme, investors still weighing the pace of CapEx spend by tech companies.
Like everything, what we tell people is you can't market time these things to the day. You have to kind of sense changes in the second derivative, and we're sensing it. I mean, just look at some of the news flow that you're seeing from companies like Meta. It kind of signals to you that there are conversations about the rate and speed and return on investment on some of this CapEx, and how can they pull forward their monetization strategies.
Morgan Stanley's Lisa Shallett there. More on the tech story next. This is Bloomberg. Welcome to the opening trade. We are approaching that opening trade, and the futures picture looks like this. We are expecting something negative. Now, there's obviously the sell-off that we've seen through Asia, MSCI Asia Pacific down by nearly 2%, and some of that is tech-related. We'll come to that in a moment, Tom. But there's also the higher oil price story, and so we factor that in. We're up by 3.8% at 78.90 on the back of further attacks between the US and Iran around the Strait of Hormuz over the weekend, and that has elevated oil prices, lifted yields, so all of that weighs on stocks.
Another negative catalyst for the equity markets. We're used to volatility, of course, when it comes to South Korean stocks, SK Hynix, of course, but the volatility of today has been quite something. SK Hynix shares actually falling more than 15% so you can see, in fact, 16% by the close. That is the most on record in terms of the size and scale of that drop. And that's after the memory chip maker's highly anticipated US trading debut, which actually saw a gain in the stock price on Friday, stateside double digits. Let's bring in then the details around this. It's worth noting as well that Bloomberg spoke to, after that US listing, the SK Group chairman, Chae-Tai Wong, who says the conglomerate has an ambitious plan to invest more money in the US and commented on the company's chip capacity outlook. Take a listen.
I have some confidence that the demand will be grow, and our supply capacity never going to catch up. It's going to be until that our society, human society, has set some settlement with the AGI. Then, I guess that that's a kind of normalize at all the cycles. But anyhow, that until then, we need that a lot of memories.
OK, for more, Bloomberg Intelligence Senior Strategist Matt Bloxham joins us. Matt, so the IPO was well received in the US, double-digit gains. Today, a brutal day for SK Hynix, and we gave that kind of the historical context there. What is leading? Is this profit-taking? Is it reallocation to the US? What is going on with SK Hynix, or what has gone on with SK Hynix today?
Very good question. I wish I had all the answers. I mean, it's quite a big drop, isn't it? And I think to some degree this is like a continuation of what we saw last week with the Korea market. A lot of pressure there, and some profit taking because these shares have been up a lot. And we've not really had any incremental fundamental news of late to kind of really justify more positive views on the stock given how far it's gone. We heard there from the chairman about this kind of optimistic view about the midterm, and that beyond the current AI generation there's AGI which is going to sustain demand, but I think a lot of people are still kind of reserving judgment on that. But we're now at a really big arbitrage between the newly listed ADRs and the Korea stock. I think I just did a quick calculation, and I think it's something like a 27% discount in US dollar terms between the two now. So the big divergence there in the trade. So we're going to be interested to see what happens with the ADRs later today.
Absolutely. So which is lower?
Oh, so the Korean shares are 27% lower than the on a US dollar equivalent.
Okay, so that's something to watch. And so this might just be a reaction to that listing in the States. But thinking about the broader picture and all the signals we're getting around AI, we got numbers out of TSMC, just a rise in sales of almost 68% in June. This is just one monthly sales report, but leading up towards an earnings report fairly soon, I think. Yeah, that's right. So the earnings are on Thursday this week, so we'll get more of the detail. And I think people are going to be closely watching the gross margin figure in particular. This number's 68% year-on-year growth in June, but that was largely anticipated by the market. The numbers coming in pretty much in line with consensus. So I think the message is being received loud and clear that there's really strong momentum in this business. So I think beyond gross margin in the quarter, the market's going to be very focused on the kind of the forward guide on sales to see whether that growth can be sustained. I think consensus actually looking for an acceleration in growth in the next quarter.
TSMC has to buy a lot of lithography machines for ASML, Europe's most valuable company, and they are reporting results on Wednesday. Does this signal optimism for ASML and the demand that's coming through there? What are you going to be looking for from those results? I think it does. They're one step back in the kind of the food chain, if you like, and so they should be benefiting quite substantially from all of this capital spending we've had announced and the kind of stuff that's just kind of coming through. So the fact that the likes of SK Hynix and others are deploying more capital should ultimately flow through to demand for their machines. I guess obviously you've got the
the kind of consumer electronic side of it that's been a little bit softer, so maybe that's a kind of a bit of a counterbalance. But I think overall the demand for AI technology, AI chips is probably more than enough to compensate for that.
Okay. Matt, thank you very much. Bloomberg Intelligence senior strategist Matt Bloxham with the latest on the tech sector. Plenty more on the tech sector, of course, as we go through these this week with those key earnings reports still due. Let's turn our attention to the markets in 3 minutes on the opening trade with our Asia Markets Executive Editor, Paul Dobson. Paul, good morning to you. It's Monday once again. What is your focus right now? Because, of course, the tech sector has been in focus through the Asia session, but are we also seeing developments in the Middle East cutting through into the Asia session? A substantially higher oil price, of course, doesn't play well for some of the nations that you're watching.
Yes, good morning, Anna. So a colleague said to me, a flippant, off-the-cuff remark, there's just one narrative today, it's all about the Middle East. And I said, no, I think that there's two narratives here, right? Because while things are moving the way that you would expect from the Middle East playbook perspective. So we've got stocks down, we've got bonds down, we've got stronger dollar, we've got weaker precious metals. A lot of the same trades that we saw when the tensions were at their height earlier on in the year. The move in equities is much stronger relative to the move in other markets. And that's also because this the sell-off in SK Hynix really is catalyzing another downdraft for AI stocks overall. I think for SK Hynix, there's a few things going on. One, this is, a diluting for the existing shares in South Korea. If you think about it, they haven't. I saw someone joking they haven't done this share sale of ADRs in the US to pay back dividends or do a buyback, It's because they want to invest more. So there is going to be that big spending drag on the share. We've seen foreign investors putting cash out, suggesting maybe selling the South Korean stock in order to buy the ADRs. And on top of that, I think that there's just the ongoing concern about those spending plans with earnings coming up. So that overall contributed to a bigger drop in the tech stocks than you might expect just from the Middle East tensions alone.
And Paul, you mentioned the sell-off in bonds, and obviously the fact that oil ties into that, higher oil prices typically means higher yields. When it comes to the trajectory from here then for the bond markets, is it US inflation data tomorrow or Warsh's testimony that's going to be more important?
Yes, Tom, both are important, but I think the market is going to be paying a lot of attention to Warsh and what he has to say. We had the Fed minutes. The Fed minutes was interesting. It didn't just indicate, the concerns about inflation from an oil market perspective, but also the concern that AI is actually inflationary in the short term, the idea being it's pushing up consumer goods costs. So it'll be interesting to see whether he labours on that very much, lingers on that. The market has moved back to pricing in the Fed much earlier as a result of the latest Middle East tensions. We have 2-year yields at the highest since early last year. So, the market is getting more and more worried about the need for the Fed to act sooner.
And Paul, are you watching the earnings season this week? It certainly kicks off stateside, but what's in focus for you?
Yeah, I think that Tuesday is going to be an extremely busy day for earnings, with the US banks kicking things off. I think that on our side, we had the TSMC sales today, but we get fuller earnings on Thursday. I think that that's going to be pretty critical given where we are with this AI cycle. And I think that in general, people are going to be looking for across the earnings season to the AI companies to see what their capex plans look like and what their hopes for returns on all of those investments are, because that's really been the overriding concern that's clouded markets in the second half of this year.
Paul Dodson, Bloomberg's executive editor for Asia Markets. Thank you. Let's switch focus and look at the stocks to watch this Monday and bring in Chloe Melly. Chloe.
Good morning, Tom. Let's start with some M&A this morning. We got Nippon Paint making a €7.5 billion offer for the decorative paints business from Akzo Nobel. And this comes just a few weeks after Nippon Paint, alongside the US company Sherwin-Williams, tried to buy the entirety of Akzo Nobel. We can see that reflected in the graph with the shares soaring and then plummeting after those two companies abandoned their pursuit of Akzo Nobel. The company has decided not to engage, apparently, with Nippon Paint on that potential deal for the decorative paints business, but we'll be watching out for any market reaction on this. Moving on to tech, which of course has been one of those main sectors in focus over the last few weeks, as we've seen this AI trade see so many ups and downs. And so this morning is going to be relevant because of the Kospi in South Korea seeing this major plunge and this sell-off, which is due partly to those renewed tensions in the Middle East that could extend over here in Europe. And so all of those names that we've been watching out over the last few weeks, ASML, ASM, Infineon, ST Micro, all the chip making sector is going to be in focus, and we could see some red this morning across that sector. And finally, let's go over to Volkswagen, because the CEO is trying to walk the line between making those really big cost cuts and also trying to appease labor unions, with the CEO saying that there's the need for those major cost cuts, but that maybe there are smarter solutions than just closing down some factories. And so there's this restructuring plan right now in focus. There's going to be job cuts. There's going to be changing of the model lineup, etc. But maybe the saving of those factories is going to be enough to diffuse the tensions with labor unions, and we'll be watching out for any market reaction. As we can see here, Volkswagen has not been having the best year, so it's going to be one of the ones to watch out for as well.
Chloe, thank you very much. Chloe Melly with those stocks in focus. Yeah, really fascinating story around Volkswagen and what's been happening there. Let's talk about the broader markets, though, as we go into the start of another trading week then, Tom. Of course, European equity markets broke a few weeks of gains, didn't they? Last week actually saw a retreat. And we are looking at some weakness coming through today, and partly that will be due to a higher oil price. So we're up by 3.7%. As Paul was saying, two dynamics, a higher oil price and weakness in tech. Both of those things could be driving us.
Year-to-date, European stocks up 8%, US stocks on the S&P 500 up about 10%. So we're also watching, of course, the energy majors that may get a lift on the back of high oil prices. On the flip side of the commodity story, you do have a lot of pressure coming through for gold and silver right now, presumably on bets that maybe the Fed will have to hike faster and sooner than expected. Silver is down 3% and gold is down 1.6%. So we watch the miners as well this morning.
Absolutely. So the European equity market futures picture points to some downside. Will the London market be cushioned by exposure to big oil? We will come back with the market open for you this Monday morning. This is Bloomberg. Welcome back to the opening trade. A few minutes then until the start of another trading week here on European equity markets. And does Friday in the United States tell us anything useful that we take into today's session? Well, the European equity markets closed around this yellow line. And since then, we did see a push higher in US stocks, or after that, we saw a push higher in US stocks during the US session. But perhaps we've forgotten all about that over the weekend. The beginning of this chart does show you the power of those news headlines around the Middle East, the power that they still have to move markets. And we saw that on Friday, both in the European session and again over the weekend. And so if we show you the futures picture, that does seem to be reflecting Middle East news flow. So we are expecting some European stocks to be substantially weaker as a result of the higher oil price. Certainly that will stick to anything very energy intensive, but the FTSE 100 could outperform, even though that might just mean a flat performance, Tom, as a result of having some heavily weighted oil stocks, of course. So we put in that dynamic around the Middle East, but the other dynamic, the negativity around technology, and specifically SK Hynix and the Kospi, are all something we will watch out for as well, Tom.
And all part of our stocks to watch then this Monday. Let's start with the oil stock story then, on higher Brent and higher WTI. This could be a part of the equity market in Europe that outperforms given the higher oil prices. So we watch the oil majors, of course, listed here in the UK and in France, predominantly in terms of the big names, as to whether or not there'll be upside on the back of prices up around 3% on Brent. Tech stocks, of course, in focus. To Anna's point, SK Hynix, a record drop in the session today over in Korea. The Kospi ending lower by close to 9%, and the SK Hynix falling double digits to a record drop. So the read across to the likes of Infineon, ASML, ASM, all of those in focus for us today. Akzo Nobel on a potential upping of the offer, at least a new offer coming in through Nippon Pay. So we'll see if that stock moves on the back of that, Anna.
Yep, M&A in the mix as well this Monday morning. More broadly, we're heading into a busy week from a macro perspective with CPI out of the US, and we're going to hear from Kevin Warsh. So European equity markets getting into their stride then this morning, or at least getting out of the gates this morning. And the FTSE 100 is the first to wake up, if tentatively. Pretty flat, though, on the FTSE 100 right now. Now, as I mentioned, we're heading into a big week with CPI, Kevin Warsh on Capitol Hill a couple of times. We will also, of course, get into the earnings season. And over the next 3 weeks, we start to build gradually the amount of market cap that we'll be hearing from when it comes to the earnings stories. And this week is quite busy from the banking sector. Some 5 banks reporting in just Tuesday's session. So that said, we have taken a moment to let the European market settle, and the AEX is down 0.25%. The IBEX, the CAC aren't both down around 0.4%. So a bit of negativity then, Tom, coming through on anything tech-related. Maybe the FTSE 100 being supported by the energy trade this morning. That seems to be pretty flat. What are you seeing?
The energy story is there in terms of the gains coming through on a sector basis. That is top of your list. Energy up 1.6%. So energy is gaining. Currently the top performing sector in a session otherwise of modest downside so far across the European stock 600, down 0.3%. Tech is the worst performing sector, currently down 1.1%. Basic resources also soft. You've seen a knock to prices for gold and silver. Basic resources down 0.9%. Travel and leisure also weaker. That tends to be a sector that is punished on the back of an uptick in geopolitical risk premium, particularly coming out of the Strait of Hormuz. So travel and leisure also feeling a bit of a squeeze, down 0.8%. Energy with the gains there currently. 1.6% is the upside. That is the picture. Akzo Nobel then on that M&A story, with Nippon coming in with an offer for part of that business. And Akzo is gaining right now. 3% is the move higher for Akzo, having been up a little bit strongly, more strongly in the first few seconds, currently up 3%, Anna.
Yes. I mean, the picture then for European stocks, it is weaker, but not by a huge amount, down by 0.3%. Perhaps that's the London market effect. And we're still waiting for the DAX to open, so we haven't got that component. But things are maybe a little more positive than anticipated. So more than 2/3, I think, of the sectors... more than 1/3 of the sectors in positive territory. So it's not just energy. And some days like this, we only see energy going higher. So that perhaps is interesting. Remy, Olu-Pitan joins us, head of multi-asset growth and income at Schroders. And the perfect conversation to kick off this 8 o'clock hour of the programme. Remy, thank you for coming to see us. So you are overweight stocks, I think, and very much focused on the earnings story. So how are you thinking about heading into this week then, when earnings are increasingly in focus?
Oh, absolutely. This week is all about earnings. We continue to expect earnings to continue that positive momentum. Admittedly, a lot of good news is already in the price, so that's why we are seeing some pullbacks, particularly in Asia, where a lot of leverage players are involved. But if you can sit through it, we think that for the next 12 months, this earnings momentum is ripe.
And is that very tech and AI focused, or is it a different earnings story we're watching for?
Well, the good news is that we are seeing positive earnings, particularly in the US market, across sectors, energy, banks, but the big divergence is coming from the banks, so coming from the tech stocks. So the magnitude of the positive earnings growth is quite dramatic there. But if we're thinking about positive trend, it's quite broad-based.
Where does that leave your view on European stocks?
I mean, we like European stocks. The challenge is we are in the middle of a prolonged managed conflict. That's our view. And as a consequence, Europe in general tends to be the peace trade, and we're not getting a clear peace deal. And so it leaves Europe vulnerable if we just look at Europe naively. But within Europe, we do like the banks.
Okay, you like the banks. Can you expand on the banks? Because I get it in an environment where rates are on hold, maybe they're moving up, maybe the ECB goes with another rate increase, and yet there's the weakness in the domestic economies of the Eurozone. So what are the factors that you're seeing that can propel the banking story going forward for Europe?
Absolutely. So we think that financials, particularly in Europe, are benefiting from the earnings story. So that's where we're seeing a clear positive earnings momentum. And why is that? Because we finally have a rate cycle in Europe, something we've struggled with for many, many years. So you are seeing that profitability come through. You are seeing a steep curve. And when it comes to the European growth story, actually, I think a lot of economists are surprised by how resilient Europe has been, given everything that's been thrown at it.
So we do see this as a rate cycle then? It wasn't just a sort of insurance hike. I know many in the ECB have pushed back against that narrative, but some have suggested that it was an insurance hike in case of a prolonged conflict. I was interested in your prolonged managed conflict terminology. I think maybe that does help us understand what we're seeing. And in that context, do we see a proper hiking cycle then from the ECB?
We have to get used to it, absolutely. It won't be a fast hiking cycle because you are right, we're not seeing phenomenal growth to support that. But what we're likely to see is interest rates are higher for longer here to stay. And so a likely steady hiking cycle, absolutely.
And to be absolutely clear, that higher interest rate environment for Europe, corporates can push through that, and therefore banks can continue to drive revenue gains. So they get the NIM, the net interest margins, from higher rates, but they're not going to suffer from a depressed corporate or macroeconomic picture. They can that is going to be favourable as well, even in a higher rate environment.
To a point.
To a point.
To a point, absolutely. So as long as it's a steady rate environment, as long as the growth remains resilient as it has been, I think the key is that we are seeing a managed conflict. I mean, if we do see a major escalation, which takes the oil price back above 100 and gas prices spike, then we will have to revisit that view.
Yes, and on that, how are you thinking about getting exposure to energy right now? I think we've heard from you in the past, Remy, about liking the UK and Canadian stocks on the back of this. Do you play it at a whole index level, or do you try to just pull out sectors that you want to be exposed to? How do you think about energy exposure?
In a variety of ways, but right now we really do prefer global energy stocks. So in a lot of our portfolios, we have been adding to energy, not specifically just the UK, the US, Canada. We tried via the markets because, again, earlier this year, we took the view that the UK equity market and the Canadian equity market were underappreciated. I want to use that term because of the exposure to energy. We think that has played out quite well. And right now, let's really target the stocks globally.
Yeah, well, that takes us on to your call around the UK, which is flipped to negative, yes. I think, despite the weighting of financials and energy within the FTSE 100. So energy and banks do not come to the rescue of the FTSE 100. Why are you underweight UK exits?
It will come to the rescue on negative days, like today. But more broadly, we think that actually it's time to step away. UK equity markets have done fantastically well this year. And we're quite positive on the market for the rest of the second half of this year. And so we think that there are more interesting themes elsewhere, so particularly European banks. Even in the US, we think that there are more opportunities there. So the UK has done very well, has been quite resilient, and now it's time to look elsewhere.
And Remy, talking about looking elsewhere, can I talk to you about investment-grade credit? And you say you're negative, I think, on US investment-grade credit in the States. You don't think it offers sufficient compensation for the risks. What are those risks then for that level of credit?
The spreads are far too tight to justify the risks, particularly around the private credit market. We do think that it's highly correlated, public and private, and sentiment, some concerns around private credit will filter into public credit. And at the moment, spreads are too tight to justify that. Now, while we're very positive on the outlook for growth in the US and also equities, you're getting paid for that earnings growth. You're not getting that in credit. And now, with spreads so tight, you're really playing inflation. It feels like you're taking exposure to nominal rates rather than credit.
Right. I mean, one credit analyst said to us last week, in credit, you don't need to pick winners. You just have to not pick the losers. Yeah. I mean, so how much does that apply to that core? Are you actually expecting failures within the maybe software-related credit markets then? Is that where you're expecting the weakness to come through?
Going back to that terminology of the cycle, we think that we're towards the end of the credit cycle, so a little bit too early in terms of meaningful defaults or failures. That's something we're likely to revisit perhaps in 2026, 2028. But this is the time to prepare for it. So all we're saying is you're not really getting paid. It's not really interesting. There are better ways to use your capital.
Do you have a preferred FX trade right now, or currency cross? Are you concerned about the yen? There's further weakness of the Japanese currency.
So we were very concerned about the yen, and in our portfolios we did express a negative view, which we have taken profit on right now. So we're flat the yen. Doesn't mean we're excited about the yen. To be honest, we think that you're not really going to see much movement there because it is really an interest rate issue. So the market needs to price major rate hikes in Japan, and I don't think that's forthcoming anytime soon. In terms of currencies we are excited about, I'll be brutally honest that it's a little bit murky in the currency market because the dollar is still hanging in there, but we need a really attractive carry, so that's why we're sticking to emerging market currencies where you are getting paid.
If we get this prolonged conflict.
Yeah.
Managed prolonged conflict, but it carries on. Does that mean dollar strength continues over that time frame? What we've seen the dollar underpinned by this conflict.
Yes.
And there was an expectation that when it was resolved, maybe some of that dollar weakness would return. But if we have this continuing over the long term, which is what you suggested, what does that mean for the greenback?
It means that the dollar will stay bid, but against what? Definitely against the low yielders. It means that we really have to focus on the interest rates we're earning. And at the moment, the dollar is actually a high carry currency within G10. So let's be careful about the low yielders like the euro, like the Canadian dollar and some of the Asian currencies.
OK, Remy, thank you very much indeed, walking through all these different asset classes for us this Monday morning. Remy Olu-Pitan, Head of Multi-Asset Growth and Income at Schroders. Let's get a check on your core 6 right now, 10, 11 minutes into the trading session. And you are seeing ASML as part of the pain trade when it comes to technology. The earnings, of course, for that company coming through on Wednesday. Currently it's down 1.7%, tying, of course, to the weakness we're seeing more broadly in tech equities today. Nestle's up 0.6%. You're seeing weakness for Schneider Electric, also, of course, with the exposure to the data centre story. So that's under pressure as well for the similar reasons that ASML is, it seems, down 0.8% on Schneider. Rheinmetall largely unchanged. LVMH a bit weaker as well. Luxury stocks under pressure, down 0.5%. Novo getting a bit of a lift in the healthcare space, up 0.6%. That is your core 6. Let's check in on some of the other individual stocks on the move with Chloe Melly.
Good morning, Tom. Akzo Nobel, the paint maker, is up this morning, up about 1.4% after rejecting an offer from Nippon Paint of 7.5 billion euros to acquire its decorative paints business. And so Akzo Nobel will instead keep pressing ahead with its merger with the US company Axalta. And so we're up a little bit on the back of this M&A interest for Akzo Nobel. Moving on to technology, and we are seeing all of those AI-related stocks, those chip-making stocks, in the red this morning, as expected on the back of that read across from this huge plunge in the Kospi index in South Korea. We're seeing some of those renewed tensions in the Middle East feed into that. And then also there's really big tumble in SK Hynix shares. So there's a lot of volatility in that South Korean market, and that is spilling over into those AI-related stocks over here in Europe, with Infineon down particularly this morning. Another sector that is actually benefiting from those renewed tensions in the Middle East is the oil sector. Of course, we're seeing BP up particularly strongly this morning, but really green across the board as the US and Iran exchange those fresh strikes. And we have also those conflicting statements from both sides about whether or not the Strait of Hormuz is open to shipping. And so we are seeing those potential continued disruption to oil flows really benefiting that oil sector this morning. Moving on to defense, where Kongsberg, the defense company, came out with some earnings this morning, which were actually quite strong on the face of it, but perhaps just not quite enough, not quite impressive enough against maybe high elevated expectations. And so we're taking quite the hit this morning for Kongsberg, down more than 7%. And finally, the recruitment company Page Group is up this morning in London. We're up actually more than 7%, so quite strongly there as well, after confirming guidance and saying there were really strong results in Asia and the Americas in particular. This actually echoes what we heard from its peer Hayes last week, with this quite cautiously optimistic outlook from that recruitment sector after really what had been years of weakness. So we're seeing quite a big movement there for Page Group.
Chloe, thank you. Chloe Melly with those stocks on the move. And that is really interesting for anybody who's tracking, who thinks it's important that we all still have jobs. An important story to keep an eye on. Another important story we are watching comes to us from Japan. What will the government pension scheme in Japan be incentivized to invest in the future? Seems to be an ongoing question for markets. Earlier on, we'd seen some real yen weakness as a result of reports in other media that suggested that there would be no plans to incentivize money coming back into Japan. Well, now we hear from the Chief Cabinet Secretary Minoru Kihari, who is saying that amendments will be made to the GPIF portfolio, the GPIF portfolio, if required. So it seems a little bit of a still work in progress as to what exactly will be amended there and whether that will have an impact on the currency. OK, we keep across the yen currently at 162, just above 162 right now, US dollar JPY. Of course, we will continue to monitor that for you. Meanwhile, coming up, oil rebounding as the conflict in the Strait of Hormuz escalates. We're going to bring you the latest on the energy markets. This is Bloomberg.
Welcome back to the opening trade. We are 18 minutes into the Monday session. You're seeing the European benchmark stock 600 down 0.2%. The FTSE, though, here in the UK, gaining 0.2 as a result of the strength coming through for the energy sector. That sector is currently up 1.4% on higher oil prices. It is oil, it is energy, and it is tech as well, to the downside. So tech is one of the biggest losers across your sectors. And again, you are seeing broad losses across the benchmark. Tech down as a sector around 1%. Energy at the top of the list, gaining 1.5%, and that is lifting the FTSE 100, at least for now, Anna.
Yeah, let's talk about oil, because the impact of oil is clear on what we're seeing across the European equity space. Oil jumping this morning as conflict in the Middle East continues to escalate with fresh strikes by the US against Iran. The two sides continue to dispute whether the crucial Strait of Hormuz is open, which remains yet again at a standstill over the flare-up. Let's get the latest details then from our Bloomberg Asia energy reporter, Stephen Stachinski. So more tit-for-tat exchange of fire between the two sides then, and indeed deepening, widening would seem to be the way to describe this. An escalation, this escalation of risk for resupply efforts, is that what we're looking at for the global energy markets then, Stephen?
You know, I think the escalation is a key word here, and I think there is certainly a risk, at least according to the analysts and traders that we've been speaking with. I think there are two things that they're watching. Of course, one, where do we stand in terms of the conflict? Because if it were just between the U.S. and Iran and bases and things like that, yeah, perhaps it will stay contained to just those two countries. But at the moment, there have been a few worrying signs. One, there have been strikes of drones and missiles from Iran on Jordan and Qatar for the first time in months. The UAE also had some alarms over the weekend. If this spirals into a wider conflict where maybe oil or refining or any energy assets are then starting to get targeted outside of Iran, that could start to be an issue because, you know, if any of that gets hit, if any of that's offline for weeks, months, if it's damaged, it could take years, then that does really tighten the market. Now, in the near term, people are looking at the Strait of Hormuz and how many ships are going in and out. And as of right now, at least in terms of ships with their transponders on, the ones that we can track on MapGo on the Bloomberg terminal, there's very little happening. It's at the lowest level in weeks, according that I've seen. There is some dark transit, though. So there's some ships. I spotted one LNG tanker that went through over the weekend. They turned off their transponder to get through, likely for safety reasons. That does indicate it's very difficult to tell how much oil is getting out of the region, but if you're restocking your supplies, there are two big issues. One, not as much oil is getting out. And then two, the oil that is getting out, there are some Iranian barrels. Those Iranian shipments are now, again, at risk of sanctions because the U.S. removed their waivers on it. So that effort to restock after the big drawdown over the last few months could be more challenging.
So that's one flare-up in terms of the geopolitics, and arguably that's drawn most of our attention for obvious reasons in recent weeks, Stephen. But in the background is a changed dynamic when it comes to the conflicts between Ukraine and Russia, and that is starting to have an impact, particularly on refined products. What are we seeing there?
Absolutely. Bloomberg columnist Javier Blas had a really good column on this today, and what you've seen is especially last week, every day a Ukraine drone has hit a Russian oil refinery. There has been a real increase in the amount of attacks. And actually, when you look at across the board how much refining capacity has been targeted, hit, or brought offline, it makes up a majority of their refineries are offline. Now, that's a big deal for a few reasons. One, of course, that hurts the domestic market in Russia. But at the same time, Russia is actually an exporter of some of these products, including diesel. And they've had to restrict their diesel exports because of this. At the same time, they've been flooding the market with crude because they're unable to refine it. So there's this chart that's up on the screen right now shows that there's this growing divide between the products, those downstream products that you make out of refineries, and crude. Crude prices have dropped and they've come up a little bit over the last week. But it's when you look at the gas, oil, gasoline, diesel, it has been stronger. Now, it's not all just down to Russia. You've also seen China reduce their exports of refined products as well to help their domestic market and the consumers there. At the same time, all of these countries from the U.S., Japan, they've been releasing their strategic reserves of crude oil. So the amount of crude oil has flooded the market. The amount of refining capacity has been able to meet the demand, especially with the different outages in different places. You've actually seen the refining profits increase quite significantly to the highest year on records on the Bloomberg terminal for the 3-2-1 refining spread, which is what makes gasoline as well as diesel. So it's a very interesting time in the market because while we are talking about the drop in oil and crude oil, WTI and Brent, it's not exactly the same for gasoline, diesel, and some other products that actually are what consumers buy. It's what they buy at the pump, and it affects inflation.
And it's that context and that detail that is so important. Breaking it down for us really nicely is Bloomberg's Stephen Szczynski. Stephen, thank you for the context and the details. Of course, the energy story ties into what's happening in the airline space, but this is more now a news story about potential M&A with easyJet shares up pretty sharply in the last week or so, of course, as investors await an update from US investment fund Castlelake after Apollo's surprise £5.7 billion counter-offer last week. Any acquisition of the budget carrier will expose the buyer, whoever it is, to a challenging sector, of course, that is regularly unsettled by geopolitics and fickle consumers. Let's bring in Bloomberg Global Aviation reporter Benedict Carmel. Benny, where do things stand then at this point for easyJet?
Well, it was a mercifully quiet weekend. We had actually expected maybe Castlelake to come back. They haven't yet, so they're still weighing their options. There was that brief statement from them on Friday saying we've taken note of the rival Apollo bid, which really, I have to say, landed out of nowhere. That was Friday morning that Apollo came in and trumped the existing Castlelake offer. The numbers that exist now are 715 pence from Apollo versus 690, and you saw that chart just now there with that sharp increase on Friday, but yet investors are still, the stock is still trading considerably below either offer, so investors are probably still thinking there is some room to run here, and maybe either Castlelake comes back with a better offer still, or Apollo will need to sweeten. So that's sort of where we're at. A bit of a holding pattern, who blinks first kind of situation. But for the time being, it looks like Apollo has the upper hand.
As Tom was saying in the intro, aviation stocks then, Benny, can be notoriously volatile and vulnerable to shock. Do Castlelake or Apollo have much experience with running airlines, even if they're not going to be worrying about the share price, that there is still the volatility to deal with?
I mean, they both do have some exposure to this industry. Castlelake deals in leasing aircraft. Apollo has bought some aviation assets. What might be a little bit surprising is if you think sort of classically private equity comes in and looks for, should we say, fat to cut. And easyJet is a company that really has perfected the low-cost model. This is a very lean operation like Ryanair or like low-cost companies in the US. So if you come in, there wouldn't be anything immediate where you could say, okay, let's get rid of this or let's get rid of that. And that's usually where the big turnaround happens. So it'll be interesting to see how Apollo plans to make this work. But you know, we don't know for the time being, so we'll have to see.
Okay. Benny, thanks so much. Bloomberg's Benedict Carmel on the aviation stories. Coming up this morning, we'll be talking to Francesco Sciortino, co-founder and CEO at Proxima Fusion, as the German startup secures funding to develop commercial fusion energy. That is next. This is Bloomberg.
Welcome back. 30 minutes into your Monday session. European stocks across the benchmark are down 0.2%. The FTSE 100 have been up, but is currently flatlining at around 10,500. Energy is the top of the list across your sectors. On the downside, travel and leisure, construction and tech from the read across of and from Kospi and the SK Hynix. Currently across the member breakdown on the Stock 600 then, in a day when volumes are lower, down 50% versus that 20-day average. You're seeing 257, 258 in positive territory, but the majority of stocks are seeing some downside pressure, at least so far in the session on the Stock 600. Currently 335 individual stocks down and in negative territory, but again on a day of weaker volumes.
The focus to the downside then, and US futures also pointing lower. Tom, let's get an update On some of the other stories that we're covering this morning, SK Hynix shares in Seoul plunging more than 16% today, the most on record after its highly anticipated trading debut in the United States. Traders are citing profit-taking and a shift to the memory chip maker's American depositary receipts as the main drivers. The weakness dragged on the Kospi, sending it down by 9% at the close. Andy Burnham is considering unveiling a bolstered budget later this year here in the UK as allies and experts seek to persuade him to pursue a land tax, public control of utilities and a more ambitious devolution strategy. Burnham is on course to take over from Keir Starmer as the UK Prime Minister on July 20th. And the US launched fresh missile attacks against Iran as both Washington and Tehran issued conflicting declarations over whether the Strait of Hormuz is open to shipping or not. US Central Command says it struck dozens of targets to degrade Iran's ability to attack international shipping. Iran launched counterstrikes against US allies and also attacked some ships over the weekend. Tom.
OK, let's get a different angle on the energy story and a future energy story as well, potentially, because German startup Proxima Fusion has raised 411 million euros, including from backers RWE and Google, to develop a nuclear fusion plant. The deal giving the 3-year-old energy firm, just 3 years old, a valuation of 2.4 billion euros. Francesco Sciortino is the co-founder and CEO of Proxima Fusion and joins us now. Francesco, thank you for your time. It's a significant raise. What does this capital raise tell us about the appetite from investors to back fusion, and how are you and the team planning to deploy this capital?
Well, first of all, it says that there is an appetite for clean energy, new sources of energy, and that Europe is able to fight back and to be in the race of fusion worldwide. So it's not just a game between China and the US. Europe has done a lot more than most people realize on magnetic confinement fusion, so-called tokamaks and stellarators. And with this round, we are right at the front of the stellarator race.
Yeah, and I remember meeting you, Francesco, a few years ago, and you were making that impassioned case. Look, Europe has skin in the game here. We have real expertise, real depth of expertise, but we need to lean into it. And so this is a signal that the pieces are coming into place for that story. Why is this so important for Europe to not just play a role in fusion, but arguably to potentially lead when it comes to that competition with the US and with China?
Well, Tom, as you said, just a piece before, thinking about the Strait of Hormuz, this is a crazy level of exposure of the European energy markets. Europe does not have its own natural resources to reliably have a dispatchable source of energy, not to even speak about clean energy. So in Europe right now, and Germany is most acute in this respect, you have a need for energy, any source of energy. Then there is a desire for that energy to be clean. There is a desire for that to be the baseline, what helps us to avoid the industrialization, to not only get, the increase of energy with data centers and so on, but also support our existing industry. In Germany, this is front and center of all national politics. So the story with Proxima is not a story of just a startup coming out of a national lab and with a great technical idea. It's really a story of public-private partnerships. It's our partnership with the Max Planck Society, the national laboratory organization that we spun out from, but also the Bavarian government, with which we announced a partnership. It was late February between Bavaria, RWE, the Max Planck Society, and Proxima Fusion. And now we've been developing more and more of a partnership with the German federal government. So all the parties involved get the situation. There is great sense of urgency. There is an opportunity in the technical leadership that Germany and Europe have in this domain. And so now it's time for a European fusion champion to emerge.
Francesco, yes, talking about the technical domain, good morning. Thanks so much for joining us. Can I ask you about net energy gain? Because it did seem to be quite exciting when we saw some research suggesting that we got to a point where we can prove in a quite limited sense that more energy can result from this process than is required to feed into it, but with some caveats. So what's the next technical challenge for a wide audience to understand? How close are we to more progress on the fusion front?
Yeah, we have a clear scientific basis for this QI stellarator concept. We built one of these devices in the north of Germany, inside the Max Planck Society. That device is called W7X, and it shows that it can operate in continuous operation, so as long as you want it, in a fully stable manner. Now, the next step is to demonstrate that we can make more energy out than in, which of course is a requirement if you want to build a power plant. And the step to get there is a magnet of a new technology. We labeled this high temperature superconductors, which is now in production. So Proxima Fusion and its partners at the Porsche Institute in Switzerland, but all across Europe, have been developing a technology stack that allows us to make magnets that are much more powerful than the ones that we previously had. That Stellarator model coil, as we call it, will be up and running in 2027 by the end of the year. So we're about a year and a bit away from this very important hardware demonstration. Once you have that hardware piece, the next step is straight to a net energy device. We call that Alpha. We have a site for that. It's in Munich. And then following that, a first-of-a-kind device that we will place in the west of Bavaria on the ex-fission site of RWE.
Okay, so those are really interesting staging points when it comes to the physics and the engineering behind this. In terms of the commercial reality, Francesco, how are your timescales shifting around the commercial reality of fusion as an energy source?
We are sticking to the general picture we started with 3 years ago, which is we aim for the Stellarator model coil late 2027, a net energy gain device early 2030s, and a full-scale power plant in the late 2030s. It means it's a 1 decade long journey. And of course, that's just the beginning of a new fusion industry, of all the creation of the supply chains. So the partnership with the German government and the European community here is very important. This is not a San Francisco garage kind of startup that makes it or breaks it in just a couple of years. It's a journey that, if we're successful, will absolutely change the European industry.
And Francesco, you touched on the demand coming through from AI in one of your previous answers. You are backed as well by Google. There is that partnership. What does that tell us? What does that support from Google tell us about the demands for AI and energy that supports AI developments into the future and what their expectations are?
Yeah, both Google and XTX. XTX Markets is one of the true co-leads of this round. They both develop data centers at quite some scale. And they are realizing, of course, what many have heard, which is that energy is the bottleneck in expanding compute. So humanity now has intelligence and energy as the true key foci of attention. One needs the other. Intelligence, as artificial intelligence, is helping us to get to energy with stellarators via better modeling, better systems for design. But the energy needs to feed back into the AI centers. And now these developers of data centers are those that are willing to also go out and make sure that the new energy sources are available. Of course, these data center builders, they're looking at every source of energy. The fact that the advanced energy solutions that Google has been looking at are now coming closer to fusion, and Google has been backing multiple fusion companies at this point, it really tells you how important it is that fusion is brought to market. And the timescales here are understood. None of the investors of Proxima think that we are going to deliver power plants in the next couple of years. It does take the time it takes, but when it comes, this will be transformational.
Are you getting closer to getting additional support from either the Bavarian government or the national government in Germany? Are you in conversation? Is there potentially further funding coming through at the national level?
At the Bavarian level, we've already announced in late February 400 million of non-dilutive capital. That's a very important signal for us, and it really helped us in raising this new 400 million private round. On a German federal level, the budget has been stated. Germany is allocating more than almost 2.5 billion euros for fusion over the next 3 years, more or less. And then there is an ambition of scaling up an industry. So we know that Germany is being very serious about scaling fusion. There are a few options on the table. We have been in heavy conversations with the German federal government, as one might expect. It's still a work in progress. We can share that there is the creation of a milestone program that is running, and we're very excited about partnering with the German government in such a way. So setting milestones, and when they're met, the federal government supports financially, and also in terms of licensing, in terms of regulation, in terms of a number of domains for which we need their support.
Yeah. And before we let you go, if there are one or two things that Brussels could do to accelerate this sector, Francesco, what would it be?
We're waiting for a fusion strategy from the EU, and that has been in waiting for some time. We need the EU to realize that the creation of a private industry is not in opposition to the strengths of the public sector. Europe has done more in public research for magnetic confinement fusion than any other geopolitical bloc. And we should be proud of that, and we should celebrate it. And that's how we created the supply chains that Proxima now relies on. Now, the clear success for Brussels in seeing how the money, the funding that has been used for fusion in the past decades can bring us to a new success, they need to see a private company scaling and developing further those supply chains and creating a real European success.
Francesco, thank you very much indeed. Congratulations on that raise. Francesco Sciortino, co-founder and CEO of Proxima Fusion, with also a line there and a view there on what Europe needs to do to support this emerging sector. So from a potential future energy source, Anna, to a current challenge, which is what's happening with oil and the Strait of Hormuz.
Absolutely, and we heard Francesco referencing it as well in support of other technologies. So we are getting some lines coming through from the Iranian Foreign Ministry spokesman holding a press conference saying that the US has consistently violated the agreement. I assume he's talking about the MOU there. We know that the US has said the Iranians have violated it as well. We're also hearing from him that he's saying that the US-Iran Memorandum of Understanding is in a crisis phase, and saying that that ships are at risk via the US parallel route in the Strait. We know that the Iranians have tried to increase their influence. They have, of course, been trying to do that by disrupting that more southerly route, that route that is closer to Oman. And so we continue to watch all of these developments in the Strait. And this is not pushing oil prices any further to the upside. In fact, they've been dropping in the last half hour, but still up by 3.4% versus yesterday's, the last close.
And we're going to get the geopolitical lens shifting to Russia and Ukraine after the break, because EU leaders are set to gather to discuss Ukraine as President Zelensky seeks to spare his war-weary nation a repeat of last winter's hardships. The details, those conversations next. This is Bloomberg.
Welcome back to the opening trade. Now, Ukraine is expected to be at the top of the agenda at a couple of meetings that are taking place this week, both the EU Foreign Affairs Ministers meeting and a meeting of leaders of the coalition of the willing countries. They're both due to take place today. Now, the gatherings come as Ukrainian President Volodymyr Zelensky removed the nation's prime minister as part of a shift in political strategy ahead of another winter under threat of Russian attacks. For more, let's bring in our chief Europe correspondent, Oliver Crook. And Ollie, let's start with the gatherings that are taking place today. Two separate forums, and both of them set to put the spotlight back onto Ukraine.
Yeah, absolutely. The first of which is here in Brussels, where foreign affairs ministers from the European nations, EU nations, are arriving here at the European Council to have a discussion, yes, about Ukraine, also going to talk about Israel, and of course the latest developments within Iran. But I think for the Ukrainian conversation, I think overarching in both of the meetings, the second taking place in Paris, hosted by Emmanuel Macron in the coalition of the willing, I think also a lot of it is just going to be a strategy discussion. There is a really different dynamic for the Ukrainians coming into this year. They've gained momentum on the battlefield. They've got that EU loan that we've been talking about, but then they've also won this sort of unexpected, almost not quite full-throated, but endorsement from the President of the United States last week at the NATO meeting, where he had some really very warm words to say about President Zelensky, about the sort of Ukrainian war effort. And I think also the sort of within his own mind, the President of the United States, this idea that the Ukrainians now are holding cards. It's not like it was 18 months ago when he was sort of, yelling at Zelensky in the Oval Office saying you have no cards. You basically need to submit to the will of the Russians. So this is going to be, I think, part of how the Europeans then try to take that momentum that they've got from the American side and try to put it in their own sort of efforts to try to end the war. For the coalition of the willing, the conversation still surrounds some of the same themes we've discussed before, Anna. It's also about the security guarantees for the day after, potentially getting more air defense to the Ukrainians, which we've heard a lot about from Zelensky. He obviously very critically last week won the permits and the rights from the United States to build those Patriot batteries within Ukraine. But those are going to be the two sort of themes coming out of those meetings that we're watching very closely today.
Ollie, you've spent time on the ground in Ukraine. You've interviewed Zelensky. What assumptions should we make about how concerned the Ukrainians are right now about the passing of US Senator Lindsey Graham, who was such a pivotal supporter of Ukraine within the Trump administration, not serving in an official role, but with the ear of the president.
Absolutely. The ear of the president and really a constant lobbying effort on behalf of the Ukrainians. We know Lindsey Graham is sort of one of the senators most interested in foreign policy, one of the most hawkish senators, certainly on the Republican side, particularly now in an era of sort of MAGA Republicanism, which is much more about sort of anti-intervention. That was not at all the sort of person that Lindsey Graham was on the question of Iran, but certainly on the question of Ukraine. And obviously a complete shock, I think, to the entire world, but certainly to the Ukrainians, because Lindsey Graham was in Ankara last week at that meeting of NATO leaders. He was also in Ukraine just a couple days after that, and he just died very suddenly over the weekend. So I think for the Ukrainians, he has been a constant conduit in the sort of vibe side of the administration that is getting sort of the president on side, but he's also been the author of these sort of sanctions, this next level of sanctions that have still been stuck with the U.S. Senate, that have not moved forward, but that apparently made progress over the last couple of days. And a reminder of what those include, and these would be absolutely massive if they went forward for the Ukrainians. This is the sanction package that Lindsey Graham put forward. These are all about the secondary sanctions on those who support Russia. That would basically see the United States imposing tariffs and those kinds of measures on them. So that is something that the Ukrainians will be very concerned about, A, not having the sort of support in the ear of the President of the United States, but also potentially stalling the efforts of that Lindsey Graham sanction package, which has not yet been put into effect.
And Ollie, tell us a little bit domestically within Ukraine what it means, the fact that there's this broader cabinet reshuffle taking place, a removal of the prime minister and somebody new in post. What's the broader interpretation of these moves?
Yeah, exactly. This is a prime minister. I mean, there was a shuffle just about a year ago, which is when the current prime minister came into office. She's now basically being sent off. She may become ambassador to the United States, we understand from some of our reporting. And there are a couple other people that are in the pipeline. One is the CEO of the state-owned Naftogaz, that is the Ukrainian gas company. And of course, there is Denis Shmyhal, who is the former prime minister. We've interviewed him a few times and spoken to him. But he's also taken over the domain of energy minister. So both of these men that might replace the former prime ministers are people that are very sort of well versed on the question of energy and stabilizing energy. For example, within the sort of all the issues that we've had with the bombing of infrastructure, the destruction of Ukrainian energy infrastructure, Naftogaz, which is responsible for all of the natural gas, they have managed to keep their supplies stable. So these are two individuals who are very well versed within the energy complex within Ukraine, and something that they're going to be thinking about very, very concertedly going into the winter. Of course, this has been a sort of the renewed bombing campaign on all the infrastructure. So energy security is going to really be front and center as we sort of end towards the height of summer and, of course, into yet another winter.
Chief Europe correspondent for Bloomberg, Oliver Crook. Ollie, with the update there out of Brussels. Ollie, thank you. Let's look ahead at what else we are watching throughout the week. Later today, EU foreign affairs ministers will be meeting in Brussels, as Ollie was saying. Macron will be hosting the coalition of the willing in Paris. Tomorrow is US bank earnings kicking off. Bank of America, JP Morgan Chase, Wells Fargo, Goldman, Citigroup. So really getting underway with some crucial earnings all starting tomorrow in earnest. We also get on the macro front, US inflation data. That will be consequential. And Fed Chair Warsh, as we've been discussing on this show, testifying before the House Financial Services Committee on monetary policy. On Wednesday, on the earnings front, the big one for Europe is ASML, Europe's most valuable company. Earnings coming through there. Also US bank earnings, done numbers coming from Morgan Stanley. On Thursday, we get TSMC earnings and Netflix. And on Friday is the World AI Conference in Shanghai. Now, Bloomberg MLive editor Morwenna Coniam joins us for the here and now, the market action. Morwenna, it seems to be, this is a question for the markets today of oil, higher oil prices, risk off across equities, and tech also not playing a role as well, given the volatility we've seen again in Korea. What is standing out to you today in the session?
Absolutely. I mean, we've really seen a return to that sort of two-pronged trade. We've got oil prices rising on renewed conflict and uncertainty about where we go from here. I think in June we saw a lot of that coming back, and now we are back to a period of volatility and uncertainty. So we've got energy stocks rising, and then at the other end of the scale we have got technology stocks trailing as the AI trade does appear to be losing momentum. It's ebbing and flowing a lot more than we saw earlier in the year. And actually that does seem to keep coinciding with these days where the broader mood is risk off as well. And so that's weighing on equity indices, particularly in Asia, but also in Europe. And of course, the UK is benefiting from the higher oil prices, whilst not suffering from the loss of its AI stock momentum.
Yes, absolutely. We see the London market stand out for those reasons. And the same dynamics around a higher oil price also pushing yields higher. We're seeing that in Europe today.
Yes, we are. Bond yields are higher across the curve, across the continent. Actually, particularly so in the UK. We do tend to be more sensitive to energy price shocks. And I think there's also probably a little bit of political uncertainty going on there as well. And we're also seeing yields move slightly higher in the US. Of course, we have got that key inflation data coming up tomorrow, which I think may show things were a little bit better in June. But at the same time, as we've just seen and been discussing, the story has changed again in July. So what that means for the Federal Reserve in terms of the interest rate policy going forward, I think it will be very, very interesting what that data shows, but also putting it in the context of a changing picture since it was the period it covers.
So that's one potential risk event this week, which is inflation data out of the US tomorrow. What are you and the team, when you came in this morning, what is exciting you about other risk events? What is kind of grabbing your attention? What are you all talking about in terms of what is going to be taking up most of your attention this week on the risk events?
Yes, well, there's plenty going on. Of course, globally, we've got US inflation. We've also got all those bank earnings, which will really start to drive narrative as earnings season ramps up in the UK as well. I think sort of politically and economically in the UK, we've got Mansion House tomorrow, and Rachel Reeves will be talking about small businesses and AI. But looming on the horizon,
if she's not the Chancellor,
I think there's probably a bit less. I mean, it's still important because it's still the government. But obviously, on Friday, if Andy Burnham is set to become the Labour Party leader and Prime Minister from July the 20th, then we will be really looking at who he appoints as Chancellor. Could be Reeves, but it does appear that other candidates probably are more favoured at the moment, and that will probably determine policy going forward. But, with no mandate, I think it'll be interesting to see how much shift we really see there.
OK, Moena, thank you very much. Bloomberg Markets Today editor Moena Coniam with some of the events we're looking forward to this week, and indeed things moving markets right now. We'll add to the list of things we're looking ahead to then. US CPI, Warsh testifying. There's going to be a lot of football watched here in Europe.
So Spain, France.
Tuesday, that's tomorrow night.
Talking of risk events of a different type. Spain, France tomorrow night.
Yes.
An epic head-to-head. And then, of course, the big one for us, at least. England, Argentina.
England, Argentina. Yes, exactly. And John Authers has a nice piece with all of the backstory around England, Argentina, if anybody is at all interested
refresh our memories
in reading all of that. That is it for the opening trade. We have European equity markets then on the back foot this morning. US stocks pointing lower as well. So that tech negative theme looks as if it could spread into the United States. Oil prices are substantially higher as well. 78 is the handle on Brent, so not as high as they were, but still higher as we watch the Middle East developments. The Pulse is up next. This is Bloomberg.